Now, let's talk about inflation because we have some good news to report today. Canada's annual inflation rate recorded its smallest increase in nearly 3 years, slowing to 1.6% in September. CTV's Paul Hollingsworth is here to share what it could mean for Canadians. Okay, Paul.
Sandy, these are good news inflation numbers, but that doesn't necessarily mean Canadians are seeing cheaper prices. The Conference Board of Canada's chief economist says the financial picture in Canada is slowly improving.
We're seeing inflationary pressures come down. We have seen the labor market really weakening off in the last number of months, except for the latest month, the very latest month, where we saw a kind of resurgence in employment numbers.
The focus will now shift to the Bank of Canada's next interest rate announcement on October 23rd.
It's possible that the bank acts more aggressively and lowers rates more quickly.
Canadians are still facing tough financial pressures to put a roof over their heads. Rent prices increased 8.2%. Mortgage interest costs in September were up 16.7% compared to September of 2023. As for the cost of food,
you got to go wherever you can get the best deals.
Groceries rose 2.4% in September, a faster climb compared to the overall rate of inflation. This shopper is not finding many cheaper deals.
I don't see it. I don't see it at all.
Sylvain Charlebois says it's difficult to predict when food prices will drop. There are two main factors keeping the cost of groceries from climbing even higher:
Energy costs and our dollar. Those are the two things that are keeping food inflation at bay. Say a barrel of oil would have actually gone up to over $80 or $90 because of what's going on in the Middle East. We would have been in trouble.
Canadian consumers are also getting a break at the pumps. Gasoline prices in September dropped 10.7% compared to 12 months earlier. Sandy.
All right, CTV's Paul Hollingsworth. Thank you, Paul.